ledger. So even if we have less people attending at a point of time, you still have a lot of other people who watch it later on. So Happy New Year, everyone. This is the first in the new year. And we are delighted to, and we have a lot of practitioners, thought leaders, industry leaders, government opinion makers, government decision makers join this platform. And someone will put a link in the chat so that if you want to access all the other webinars, you can do that. And today, I'm very happy to invite a very illustrious group of speakers who have been in the industry for a long time and have played various roles. So today we'll talk about the Agri Collaboratory projects, AgFx, Digitalizing and Democratizing Agri Finance for Smallholder Farmers. And we clearly know that in spite of having a lot of priority sector lending and all kinds of policy initiatives in India and elsewhere, the small farmers' access to finance is just hovering between 10 to 15%, which I think is, in spite of all the developments we have in digital technologies, data and all, which is, I think, a very big outlier. So I think we are all working in many other regions to really see if we can solve this problem. We are also launching an innovation challenge on trade score for all smallholder farmers in Africa. And I think this is also something which we would like to learn on how we can learn lessons from what Agri Collaboratory is doing, and can we take these lessons globally. So I want to now invite first Nipun Malhotra, CEO and founder of TAC, to first explain the project. And then I think after he talks, I think Nipun, would you like to introduce all your collaborators, or you want me to introduce them afterwards?
You can briefly do it now, Parmesh, but then I'll pass it over to them as we go on.
So we can get it out of the way then. I also have a pleasure in inviting Ashutosh Vaidya. I'm meeting him for the first time, but I'm hearing about him for some time, and he has been in the global IT industry for a long time. And so all the people whom we have are from the information technology industry, which is, I think, very important when information technology leaders are looking at solving the rural trade problem. It's very exciting. So warm welcome, Ashutosh, to you. And then Raj Vallabhneni, who I think I met earlier, and we've done probably one webinar with Kalgudi earlier also. And so again, he's really a social serial entrepreneur. I know about AgriMark, Kalgudi, lots of other things, and he also has spent times with technology players like Honeywell, Microsoft, Google. So warm welcome, Raj, to you as well. So I would hand over you to Nipun, to you. The format we are following here is that we will have about 15 minutes each from each of the presenters. And then we will organize, and we will have, I think, hopefully, we will have the Rabobank Foundation, Rabobank. Nipun, is he joining?
Yes, Arindam is already here.
Arindam, and warm welcome to Arindam as well. Is also he has also been part of this series in the past. So I think we will have a discussant from Arindam, and then we'll open it up. And the format we follow is that please populate the chat with your questions, and we will source your questions and maybe invite you also to join the discussion. But keep on populating your questions as the speakers are coming in the chat as well. So without further ado, Nipun, over to you.
Thank you, Parmesh, and welcome everyone. Thank you to you, Parmesh, and to the World Bank for giving us this opportunity. Really look forward to both learning as well as sharing. This is a collaborative kind of an effort. So really look forward to that. And okay, you can see my charts, Parmesh and Sunil?
Yes, I can see.
All right, perfect. So what I'm going to do, Parmesh, within the 45 minutes that we want to cover overall, I'll speak for about 9-10 minutes very quickly, talk about the approach and talk about the Agri Collaboratory very briefly. And then I'll pass it over to Ashutosh and Raj as our co-founders. And they will spend a little more time on different aspects of the AgFx, the use case that we are working on at this point, right? Before I start, Sunil, if you can enable Arindam to be able to speak, that will save us some time as we go ahead. Okay.
Yeah, sure.
All right. I'm trying. Okay, now I can move now. Let me spend maybe 30 seconds on the challenges in Agri. I think we all recognize the fact that there are lots of challenges. Certainly in terms of inefficiency, because Agri consumes a disproportionate amount of resources like land, water, labor, etc. 50% of the population is in some manner or the other dependent on agriculture, but it generates only about 70 to 18% of the country's GDP. So there's a fair amount of imbalance. And if India has to go from a current $3 trillion to reach $10 trillion in the near future, it is absolutely clear that Agri has to play a huge role in that journey, not only by becoming a bigger part of the economy, but also by being more efficient. Having some difficulty in moving the charts. All right. So that really what I want to spend a minute on is really thinking about why do these problems remain? What is the key underlying root causes? We know the challenges, but what are the root causes? Why complex Agri challenges remain so decades after decades? One, very clearly, we tend to apply short-term fixes and they don't work, right? This effort needs a longer-term commitment, 10, 20 years, maybe even longer. Second, most Agri players, including not-for-profits, by the way, often prefer to compete instead of collaborating. There's too much of duplication and too much of siloed behavior. And finally, we all recognize that digital agri is the future. That is the way we want to go forward. But the lack of data standardization, the lack of data sharing, policy issues comes in the way to rapidly scaling and the use of AI and ML models, etc. University of Stanford calls this the stagnation chasm between pilots and impact. And the three items that they highlight are very similar to what I covered earlier. So therefore, the Agri Collaboratory is set up under a very unique construct. We are a Section 8 not-for-profit private limited company. And by design, we don't compete with anyone, right? And we operate within a set of clearly defined principles. The first being that unlike many other players, we focus on the bottom of the pyramid, women, tenanted, and small farmers. Second, trust and transparency is our core currency. To ensure we work as an ecosystem, to ensure that we can build an ecosystem across private academia, public sector entities, etc., with open information sharing. And finally, we want to prioritize our actions on impact, right, by working on use cases. TAC is fundamentally a network-driven organization, driven by volunteers globally. We have a very diverse core team coming from several sectors, and this is the nucleus on which TAC is built. TAC is also supported by a set of very active advisors across the world. Parmesh himself is one of them, as well as Sharat, who has been one of the forces behind India's TAC and iSpirit, Harsh Bhanwala, the ex-chair of NABARD, Ram Dhulipala, part of CGIAR, etc. Now, we have a two-pronged vision. One, focusing on the small farmer and ensuring and trying to work on aspects that will drive profitability and sustainability. But the second, we are convinced that India, in spite of being one of the largest consumers and the largest producers of agri products, can also become one of the global leaders in digital agri, and especially digital public infrastructure over the next several years. Now, our work on the vision translates into a set of three focus areas that we think are absolutely core to making progress. The first is to build an open collaborative ecosystem, players who are willing to come together and who believe that collaboration trumps competition. These are startups as well as established players. Now, the question is, why do they work with us? Because if we are able to collectively solve certain issues in agriculture, some of the challenges, it translates into 100x, maybe even 1000x impact on the opportunity that these organizations are able to focus on. Second, working on making Indian agri data interoperable, working on things like calibration, things like certification. How do you generate data in a more in an open construct and consume data that way? And finally, the third is really that we believe that building blocks is the way to go forward. Step by step progress is probably more sustainable instead of mega projects and monolith platforms that frankly have been started many, many times in the past several years, but have led nowhere. And at the same time, we believe that a balance between policy intervention and use case research on the ground is key to making progress. This is some of our partners. The partners that you see in the center are very core. They actively contribute on a daily basis. And then there are several others who are working slightly more transactionally with us. This is TAC's theory of change. It's a first attempt at doing that. The three things on the right are primary outcomes we are exploring, right? As we also covered in the previous couple of charts. DPGs, open collaborative ecosystem and agri data interoperability, while the three things on the left are the areas of impact that we want to focus on: economic enablement, advisory, and climate and sustainability, right? Our three-pronged strategy gets integrated when we start working on use cases. And there are two use cases that we are currently on. AgFx, which is the primary subject of today's discussion, and AgDX. And let me just quickly introduce them to you, and then we'll go straight into AgFx in a minute. So to introduce AgFx, and Ashutosh will cover some of this in much greater detail, 100 million small and marginal farmers, including tenanted and large number of women farmers, find it very, very difficult to access institutional finance. As Parmesh said that in his opening statements as well. Either they don't get it at all, right, which is the case in case you don't own land in India, or they struggle quite significantly. Now, the farmers who don't own land, and that includes 87% of the women farmers, because women constitute 60% of the Indian farming workforce, but only own 13% of the land. So the women farmers tend to struggle significantly more. Now, what's the reason? The biggest reason is that the lenders do not have access to authenticated, good quality information on the farmer, the land, as well as the crop, as well as the other activities that the farmer is focused on. And our efforts are to solve this using consented sharing of real-time, high-speed data at a low cost, right? I will talk more about that as we go forward. Now, this is the TAC's, the AgFx theory of change, which I will not cover this in any detail, except to say that Ashutosh will cover several aspects of the outputs and outcomes that we are hoping to achieve as we go forward. So that is the first project. The second project that we are on is AgDX, which is the Agri Digitization Index. Now, there is no structured way to track and share progress on digital agri, whether in India or around the world. So what we are attempting to do is to build a framework with a multi-year framework, which will use public data with three broad objectives. The first is to help us assess the penetration, the maturity, and the levels of impact of digitization in agri. We'll attempt to do that at the Indian states, and then expand to the global south, starting with Africa and then going on to other countries. The second is to help states and help consumers, and help consumers in this conversation are governments, policymakers, investors, developmental agencies, etc. Help them understand actionable insights. Where should they invest? Where should the focus be? And what steps should they try and take? So the index will unlock some of those potential actions. And the third is to create an environment where data can be used for decision making. And let me tell you, the absence of a set of data sets itself is a huge spur to take action in that area as to why is that data not available, as an example. So, and we are absolutely delighted that we will have the first public conversation on this platform in 2 weeks' time, the World Bank Learning Platform, on the 25th of January. And that will be our first global preview of the AgDX. So please do join. So as I end, we see collaboration from all of you. I think it's an exciting journey. Come and join us. And I think we can try and make a difference in several aspects of agriculture. With that, let me now stop sharing and let me pass it over to Ashutosh, who's one of our co-founders. And over to you, Ashutosh.
I hope my screen is visible to all. I hope it was a smooth transition. And good evening, good afternoon, good morning to all the folks. Very happy to be with you today. As Nipun called out, when we started the Agri Collaboratory, one of the key use cases we wanted to pick up was finance for smallholding farmers. And, anecdotally and, sort of first reaction from general interaction with people was that finance is a challenge for farmers, and particularly the smallholding farmers and those Nipun called out women and tenanted farmers who have no assets as collaterals. Right? So what we wanted to do was to, make sure that we move this from compulsion to choice, both for farmers as well as lenders. It is today in many economies, the central bankers actually tell the institutional bankers to do a lot of work in this space as a guideline that you must do 10, 12, 15% of your business in the priority sector. We wanted to make sure that it is not done by compulsion, but by choice. And similarly, farmers should go to institutional lenders because it's a good business and not because they have no other choice. So our aspiration is to make sure that we include small farmers in India growth story. Many of you would have heard about success of digital public goods in India, our UPI story and others. So that's a key inspiration, as well as a lot of building blocks that could be picked up from there. And finally, one thing that we figured is that while we talk about digital, the kind of audience that we are addressing is perhaps not 100% digital ready. So we want to make sure that we do a combination of digital to physical and make it work for them. So Nipun mentioned a little bit about this. So we did a lot of groundwork, went around doing surveys, meeting people, meeting a lot of FPOs and working around. And we figured that when you look at the challenge from farmer side as well as the bank side, both in terms of finance, there is a huge gap. 30% of agri household avail credit from non-institutional sources. It takes 3 or 4 weeks. And by the time in agri, you know that time is of essence. If you don't get enough money, enough time, it doesn't help. So the credit that farmers get is lower than what they need. Right? And it takes time and it takes a lot of bank visits. So in all, it is sort of not a happy situation for them to be getting credit. If you look at it from the lender side, they complain that there is a lot of non-performing assets. The official figure is maybe 9.8%, but informally we hear of more than 20%. While it costs a lot of money for the farmers to apply for loan, it takes a lot of money for banks to process loans. So our estimate is that it costs them 3,000 rupees per loan application. And KCC, the word that you see here is Kisan Credit Card, where Government of India has offered people that if you open an account with a bank, it's actually not a credit card, it's almost a debit card. you have access to free credit, but many of these people don't even have KCCs. So in all, we figured that there is a lot of work to be done here. Right? As we started working, we found out that there is more to it. There's not just the finance side. And as we dug deeper, we thought that we will look at the entire crop cycle that a farmer goes through and look at various opportunities where we could step in and create intervention. So here is a simplified snapshot for you. When you are into farming, you start with the soil preparation, then you do sowing, then you have as the crop matures, you need to do some pest control, put the right fertilizer at the right time. Hopefully it does well. There is no incidence of drought or flood, etc., etc. You get into harvesting, store and sell. So there is a farming activity and there is a post-production activity. So these two things in dark green are the activities that a farmer does. And the boxes, the arrows below are the various interventions that many of us could step in and help with. So for example, finance is required right from the time of prepping the soil to buying seeds to buying fertilizers and pest control devices. Also at the time when you need storage space, etc., etc. Input market is a challenge for farmers. They don't get right inputs at the right price, so we can have an intervention there. And obviously, once the produce is ready, provide them market access, much larger space that can work. Also, it's a very risky business. So right from things like floods, droughts, spurious seeds, at various part of the cycle, you come across all these things where both input for risk management as well as insurance cover will help the farmers. And advisory is something that one can offer the farmer all through, which kind of seeds to select, what kind of crop to grow, how much fertilizer per unit of land, what should be the moisture level, etc., etc. So through the cycle, we can provide advisory. And as you can see, it's an ongoing cycle. And we thought that it is not just, you don't just give credit and be done with that. If the idea is to enhance the economic well-being of the farmer, it has to be an iterative process where every cycle enhances the financial well-being of the farmer. Right? So when we looked at this entire step, we figured that there is opportunity everywhere. Every one of these interventions can be optimized individually, and there is huge connection in between, so entire thing can be done systematically, and on a systemic way, you can provide far more benefits. Digging deeper, we then started looking at what is happening from the farmer's perspective. So when you look at from the farmer side, and particularly from the small and marginal farmers, when it comes to inputs, the ticket size is small. They don't have too many options from source to the quality to product that they buy. And they have no idea how to assess the quality of product that they are getting access to. When it comes to credit, we spoke about it a little bit. Timeliness, interest rates, processing time cost becomes a big challenge. And this credit is, while we need it at different times in the entire cycle, the way it gets processed, it is that finance is made available to farmers in one bulk, and managing that finance, they are not financially well literate. So managing that finance itself becomes a big issue. So while it becomes one sort of incidence of credit availability, real issue is finance management throughout the life cycle of cropping. Risk management is big issue. There is very little insurance coverage. In terms of inputs for, there is data available, it doesn't reach people in time, whether it is about potential drought or floods or a pest attack or what have you. Information reaching to the ground is a bit of a challenge, and we'll talk about it in more detail. It making sure that it applies to a specific scenario of a small farmer even more challenging, and that makes it difficult to give guidance on mitigation for all the risks that he has. Once the produce is ready, farmers have very little holding power, so they have to sell as soon as they can and get the money for it. They don't have storage capacity, and they have access to a marketplace which is probably 3 or 4 places in maybe, in their limited 30, 40 kilometers of the radius, right? And advisory, again, is challenging. The choice of crop they should be having, when they should be doing the sowing, right? Which are the new farming practices, technology awareness, etc., etc. So we very quickly realize that when we are talking about farmers' finance, the economic well-being of farmers can have a much better outcome if we optimize all the interventions which we talked about and not just talk about credit. So at this point of time, I would like to request my colleague Raj to chime in. He has been working a lot for many years in the ground, working with farmers, and to give you a perspective from the folks who provide service, right? And also some issues related to, when we want to get digital and technology into it, what gets them into trouble. So Raj, if you can step in and help me with this.
Thanks, Ashutosh. Ashutosh, like you drive the slides so that I don't have to do that. Yeah, again, good day, everyone. While Ashutosh has talked about some challenges that are well understood and probably generic, I would like to delve into a couple of challenges that have become more apparent after multiple interventions, experiments, and specifically when we try to scale them up. One of the main challenge we face is integrating different systems, processes, and practices that happen in agri sector. For any large-scale intervention at an ecosystem level, we need to integrate various players for seamless discovery, engagement, and transactions. When two systems needs to interact at scale, both systems need to be digitized, or rather digitalized, and have standard vocabulary, and also a robust handshake mechanism, and appropriate throttling and so on, right? So unfortunately, the reality on the field is not encouraging. We all know that farmers are not participating digitally, but for interventions at scale, we need digital communities of smallholding farmers, a kind of phygital model to take a product to the farmer and hand holding and so on. But if we actually flip this onto the other side, like the supply side, like whether it's finance, inputs, academia, and outputs, or so on, they themselves had to be fully digitalized, and they are also not ready for scale. For example, how many loan products in any of these developing countries have you seen online, right? Like where you can search and opt for it. There are hardly any. As a result, what is happening is the pull from the farmer is not at all happening. And interestingly, for push is also not happening because these supply side has no access to these profiles or the digitized information where the push can happen. So fairly manual and traditional channels are being at work here. This is leading to very inefficient and non-scalable discovery. But even then, even if we solve the discovery challenge, we get into the challenge of scale that we see very, very clear in many of our experiments. Like most of the finance companies working with farmers work in a kind of very typical pipeline model, which cannot scale to the potential surge that can happen when these things are digitized and pushed. It actually will put enormous pressure on the application processing, underwriting, customer engagement, and so on. As a result, effectively what's happening is these systems both the farmer side and on the supply side, they are not at all interacting in a way that can actually transform the ecosystem. So what we realized was a need for a neutral intermediary layer that actually understands the supplier services with respect to its capabilities, limitations on one side, and farmers on the other side in terms of their needs, context, and connecting them with appropriate service providers in between, and more importantly, throttling the flow where necessary. In fact, that is where the AgFx comes in as an intermediary layer connecting these two things. Next slide, please. Ashutosh, yeah. So another major challenge is the lack of standards. For instance, a small district in southern India is known for dry chilies. And obviously, as development agencies, governments, and all of us want to give them the right information, right access to the finance inputs, and enable them remunerative prices for their produce and so on, right? Unfortunately, it is not happening as expected. And one of the main reasons for is the lack of standards. For example, the district I talked about has about 50 different varieties of dry chilies. I mean, they can be probably grouped into a smaller set, but the point is every of this variety has its own characteristics that need to be understood well enough before we can actually target the right information, suggesting the right inputs, and also giving access to the differentiated markets. Not only that, each variety has also a different value in terms of monetary. Now, how can a financial institution, let's say from the credit perspective, effectively give loans based on this chili stock available, like in warehouse receipts or something? It is failing miserably, particularly, there is no standard way to assess the value of the cash flows or of the stocks kind of stuff. So we often hear about some interventions succeeding, but however, these successful interventions are actually micro-targeted or small pilots. They start to fail when we try to scale them up. And the primary reason for that is the lack of taxonomies and standards in terms of the commodities, quality, quantity, trade, packaging, you name it. Unfortunately, nothing is standard, which is actually not letting any of these interventions or activities to scale. At AgFx, we are attempting to solve this issue from the bottom up by standardizing these around the finance to start with. Understanding one is on the commodity side and other is on the even standardizing on the supply side and enabling the interactions and moving further up in the value chain. So now again, let's go back to Ashutosh to hear more about our learnings. Thank you.
Thank you, Raj. And I think like you called out, there are, while we sort of get very excited with the opportunities that the digital world presents, we also see the ground realities and figure out that before we make sure that digital comes into play strongly, there are a lot of work, foundational work that we need to do. So in this whole exercise, what we wanted to do was do some ground truthing experiment, ground research, to make sure that we are addressing the problem right. So here is something that we have been doing over the last many months. And in this process, you can see a lot of logos at the bottom. Here are the people who have helped us fine tune and get into absolutely granular understanding. I think I should take my words back. It's too complex to say granular at this point of time. Get to the next layer of understanding, right? So what we have come to realize that it is not enough to make sure that finance is made available to farmer. We have to make sure that finance is given and the farmer is also provided adequate help to be able to repay that loan. Right? Second point that came across to us very strongly, that as far as farmer is concerned, they're not very financially literate. So their money is fungible. And therefore, while the money we as institutions, we tend to give them money for purpose A, purpose B, purpose C. They see money as money, and that money gets used all over the place. So we need to focus on household finance, if you're particularly talking to this sector, and make sure that we talk about household finance and not just farm finance. Right. Then, while I think I've been watching some comments coming in, yes, there are many states and regions which are saturated with credit, but there are areas where credits are not so easily available. So what we are wanting to do is go to only those places where there is challenge and where things are working well, not worry too much about that. Right? In order for the farmer to pay back loan, I think insurance will play a very, very important role. So again, you would have seen us start with agri finance, and then we said that we dive deeper, and then we started discovering that in order to solve the problem, in order to challenge of finance, we need to do a far more systemic approach, and insurance came in, right? And then one very simple advice to us that it's a complex problem, hairy problem, don't rush, don't expect overnight results, be patient, be persistent, things will happen. And I think one of the things that we also see that digitization as well as digitalization, a big bang approach with this audience is impractical, both because of their sort of experience and their knowledge level, etc., etc. So what we have come to believe that it is important for us to take a step-by-step approach, create small focus model, implement them well, learn from there, and like Raj was calling out, identify challenges to scale. And then once things work well, then start scaling up. And another thing that we would want to do is make sure that instead of offering products, this idea of bringing service to the farmer, where input is controlled by the service provider, makes things far more efficient. So we are thankful to people who contributed to our learning and appreciate their feedback, so that we've been able to get a much better understanding of the situation. And hopefully, purpose of this webinar today is to interact with a lot of you, get your feedback, your comments. Hope to learn from all of that and start building a more robust solution. So I called out in the beginning that our inspiration that digital will work is that coming in from the point that there is a lot of success that digital public goods in India has already seen. From Aadhaar was the base, then we saw UPI, right, and then we saw the vaccine program in India. So not only does it provide us inspiration, it also provides us a lot of ideas and building blocks which can be sort of followed to build a digital solution which works for this cohort of farmers. Right? So Nipun had shared this slide earlier. We are looking at potentially impacting 100 million farmers who are in the small, tenanted, and gender-wise women category. And as you see, we are looking at input marketplace. We are looking at the finance marketplace. We are looking at the output. So there are lenders. We want to make sure that all data sources, whether it comes from public sources or government sources or crowd sources, right? We want to make sure that all the data sources are captured well. We are working with a couple of other partners to make sure that there is a robust data exchange. And this allows us to not just do the good assessment of credit, but also make sure that it becomes a nice iterative cycle. And like we called out, we want to make sure that there is a physical connect here. The farmers on the ground, many of them today still use feature phones. They don't have access to smartphone yet. They use local dialects, not even the 30, 40, 50 state languages that we have, right? And their literacy levels are relatively low. So we want to make sure that there are trusted partners available on the ground. It could be, you can call them VLE or village level entrepreneurs or farmers collectives or farmers produce organization. We want to use their presence and their connect and trust with the farmers to reach out to this 100 million out of that 140 billion farmers of India and make sure things work for them. And the building blocks for each one of these is available with our partners and us. And we are very confident of stitching it together and producing some quick results. So here again, I'll like to invite Nipun. He had shared some elements of this before to tell you very quickly how various jigsaw pieces come together and how the data exchange enables us to get a good picture of how to go about solving the problem. Nipun, over to you.
Thanks, Ashutosh. So one of the things that Ashutosh covered briefly was the potential for the farmer, right? But we sometimes forget that solving this problem is hugely attractive to the lenders as well, because I think there is about $300 billion of informal finance flows that can become formalized. And I think that's a huge incentive and motivation for the lenders to get involved as well. Now, on this chart, fundamentally what we are trying to do is to use data from different sources. There is no organization in the country, neither the government, who has all the information that potentially can help solve a few of these complex challenges. But by collecting data from disparate sources, and as far as possible by authenticated and standardized sources, so for example, independent sources, right? Not just the primary sources from the farmer, we are confident that you can build views that can solve a credit assessment, It can help a farmer discover the right market. It can help insurance companies decide whether they are the right, the claim is valid or not, or the government to predict the price of produce a few months before the harvest season, as an example. You need different data sets, but all of them can be brought together. Now, that's where a data exchange becomes a very critical design point in our thinking, which can take data from disparate sources, onboard different data providers, and harmonize the data sets and be able to stitch different views together for the consumer, right? Consumer in this case being the bank or an entity. Can we go to the next chart, Ashutosh? So on so that being a fundamental kind of basis of everything that we are doing, this architecture here is really a data flow architecture. How a farmer with consent, using vernacular, as Ashutosh emphasized a few times, using in local dialect or local language or local is able to provide consent, apply for a particular service. In this case, it's finance. And then the system should take over. And the Agri Data Exchange should be able to pull data from multiple data sources, feed it into a finance assessment application platform, which then presents a report for every lender to access. And if there are 200 lenders on this platform, they can decide whether they want to lend to this farmer or not based on the information that they're seeing. If 5 lenders agree, then the farmer chooses one of them. The transaction happens digitally. The loan is secured. Money is paid to the lender. Money is paid to the supplier, input supplier. And just to think of our holistic approach in terms of how do you make it commercially viable, the lender today spends about 2,000 to 3,000 rupees, which is $20 to $30 sometimes, in processing each transaction. So we're asking them to pay $6, 500 rupees at a transaction cost to keep this engine going, right? Which feeds into the engine, which also pays for the data providers. And by the way, the lender also has access to subsequent reports after the farmer has bought the seeds, maybe a month later, maybe 2 months later, to try and help understand whether the farmer actually misused the first tranche or actually used it productively. So in this matter, I think 2 things will happen. The first is a data market will emerge for agri. Second, the lenders will be able to now decide to pay a higher amount or a lower amount based on the efficacy that they see from the data providers. Back to you, Ashutosh.
Thank you, Nipun. So one question that a lot of people would ask us, so, there are so many fintechs, so many people trying to work on this. So what makes you so different? So we thought we'll capture some of this and share with you. One of the first thing that we want to be very clear about, that we are talking about financial inclusion for marginal, tenanted and women farmers, right? There are a lot of fintechs, there are a lot of people working on it. Commercial fintech startups focus on the creamy layer, which is about 30 million. We are talking about 100 million farmers who are small and poor. We want to work with them. Other thing that we want to do, by philosophy, we are a non-compete, non-for-profit. So we want to make sure that we create an impact. And in that process, wherever there is an opportunity for collaboration, we want to step ahead and do that. We will be collaborative. We will build an ecosystem, because we realize that it's a very complex problem. It cannot be solved by us alone. And more people who come along, share knowledge, information, and collaborate will be able to do that much better. Therefore, we are encouraging co-creation of agri digital public goods, that can be used to create digital public infrastructure, right? And Nipun called out in detail that there's a lot of data available. We want to make sure that by making sure that there is good standardization, there is exchange created. We want to make sure that all the data available is interoperable so that it can be leveraged well, right? Other thing that we wanted to call out as one of our differentiators is that we have been interacting with a lot of fintechs, and we realize that many of them have a very siloed and very narrow focus. So somebody would look at enabling evaluation, credit evaluation of a farmer. Somebody will look at only onboarding. Somebody will look at insurance, etc., etc. Very few people are looking at agri-finance with the holistic approach that we just described, that we want to optimize the entire crop cycle and want to make sure that intervention, risk mitigation, input, output, and finance all go hand in hand all together to make it work. And I'm seeing some comment here that, look, technology is never always the solution. We agree with you. So it is digital plus physical. We want to leverage digital, but there is a lot of work that needs to be done by the presence of physical connect with the ground. So this is what makes us different from a lot of others on the ground. Right. So working with the ecosystem, just wanted to quickly share with you that when we are looking at entire ecosystem, we have farmers, we have lenders, we have people who provide market access, then we have people who provide data sources, people who provide technology access as well as advisory. So, and then you have state government and organizations like NABARD, which make sure that policy level decisions are taken. We get a good global picture of what is happening. We get best practices, and we have access to experiments that have worked in the past and experiments that did not quite work so well. So this chart kind of captures throughout the area of intervention that we spoke about, the partners who are already working with us, and we are looking for more. For example, lender at this point of time shows Samunnati as one of the partners. We are in the process of talking to a few more lenders to bring them on board. And similarly, in the area of getting market access, Kalgudi provides a good platform for both input and output marketing. And we are working with a few others to make sure that entire ecosystem becomes more robust and more widely implementable across the country. So it's a, the dictum that we heard in the beginning, that it's a long-term project. It'll take time. We have to be patient. We have to be persistent. So we are looking at a phased approach, 3 to 5 years, 4 phases. At this point of time, we are on phase 2. So we want to control and have iterative experiments in few states and few districts. So I'll quickly move to the next chart in interest of time and tell you that what we are doing at this point of time is we have selected 5 states: Andhra Pradesh, Assam, Karnataka, Telangana, and Odisha. These are states in India. And the reason we chose them is that here are states which have challenges in terms of credit availability, and we deliberately avoided areas which are a little bit well developed there. In each area, we want to pick up, each state, we want to pick up 2 or 3 lenders. We want to make sure that 50,000 farmers are onboarded in each state, out of which 10,000 loans can be dispersed. And when we do loan disbursement, the whole idea is to do it quick, in minutes and hours as against weeks and days, at few hundred of, less than 100 rupee as against 3,000-4,000, and the right amount, right? So this is what we have set goals for ourselves. We also want to make sure that the farmers' input costs go down, and when they have produce, we are able to get them good realization so that they are able to pay back, and impact on NPS goes down. So then this should become a virtuous cycle, and every cycle the farmers' well-being should become better than the previous year, and then this should become an example for others, and we should be able to scale. So here are, some building blocks that we have, right? Step 1 for us was concept development. And one of the things was, we spoke in the beginning that one of the challenges in finance is that till now, finance was based on collaterals. And you can chime in whenever you want to add a point here. Till now, most of the lending used to be based on collateral, which used to be primarily land. We want to make sure that there is a concept developed where people agree to information as a collateral. So for example, cash flow of the farmer, as people see cash coming in, cash getting used, cash coming back and then people paying back loan, that itself becomes a reason for lenders to feel comfortable and lend more. Nipun already spoke about enabling data sources, so disparate data sources, multiple areas. How do we put them together? How do we make sure that data is available on tap and at choice? Right. We do that, then we move on to building a proof of concept, do some experiments, ground truthing, show to people that it is working well at smaller scale. And there is the one important point is that while it is working at smaller scale, there is no impediment to growing it further. So it's not that we are doing it manually and there are things which will come in the way as we scale, right? As we move to the next step, other building block is building data exchanges and other digital public goods. The one help we need is policy advocacy and standardization. One of the challenges that we are facing is that while every area that we speak about, whether it is we talk about banking or insurance or telecom or what have you, everywhere you have a very, very strong level of standardization. Unfortunately, as Raj was calling out, in Agri, it is absolutely rudimentary. And we need good help and support in making sure that standardization becomes a topic for discussion. And people believe and agree that in order for technology to be brought in for scale, we do the basics right, which is standardization of data. So that's something that will be a good building block for the future. Once we get there, obviously the goal for all of us is to make sure that we integrate it with the sustainability and climate resiliency, right? So that I think it's a common purpose. So we hopefully will get to that stage quickly. And another building block important for us is to make sure that all this happens and farmers have, we are able to connect to farmer last mile. The biggest challenge with small and marginal farmers is to connect with them, get their trust, give them the benefit, and make sure that it becomes an iterative process, right? From lenders' perspective, loud and clear that unless we are able to make sure that the loan is repaid and the farmer is ready for the next cycle, this isn't going to cut too much of ice. So we thought we'll put these 7 or 8 building blocks, which over the next 3 to 5 years will work together and use these building blocks to drive towards success. Nipun, did I miss anything?
No, perfect. Thank you.
Thanks. Okay, so we have this opportunity to have this good audience with you. So we thought we will put some, ideas in front of you. We are looking for collaboration. We are looking for partners, not just for India, for the global South, right? So we want areas where we need help. Definitely, development of the agri digital public goods. For example, that EFR stands for electronic farm records. That's an example. That's a data set, public good that can be used for a lot of things. One of the things that we find is that there is a huge limitation on sandbox, both at the state level as well as the national level, to experiment, try things out, do things at a pilot scale so that both conceptually and practically things work out. So we do need help to build sandbox, execute that, right? Agri data exchange is one area where we want to build agri data marketplace so that more and more people come forward to present the data that they have. Today it is fragmented, it is all over the place. People have data, they don't know how to monetize it. So we want to make sure that we put all our heads together to get a marketplace in practicality so that those who need data can pay and take it from those who have it, so that providing data itself becomes a good practice, profitable practice for people to do, and that helps in overall growth. World Bank obviously is a very, very sort of coveted partner in terms of driving policy advocacy both at national level, state level, and in global thinking. We would need your help to build a policy draft for large organizations like Reserve Bank of India, NABARD, and other state government organizations who would if a policy suggestion comes in from somebody like World Bank, it will be far more effective than any one of us trying to do it individually. Right? And like I called out, standardization is a topic I think the need of the hour is to get started on standardization. If you're talking digital, if you're talking artificial intelligence, if you're talking big data, machine learning, all of that needs, and I'm sure many of you would have heard this often used terminology, garbage in, garbage out. So at this point of time, unless we have well standardized, well understood, commonly used data set, we will have a pile of garbage as data in, and you can imagine what the output will be. So we believe that standardization is something that will be the good foundational step for future technology to be brought into play. And of course, AgFx project needs all your help in all this, right? Pilots, concept notes, workshops, and funds. Help in any form, any manner is most welcome. So with that, we come to our end of the presentation. Thank you very much. Appreciate your time and attention. And, Parmesh, offering it back to you for questions and comments. Thank you.
So the whole group, Nipun, Ashutosh, and Raj. Arindam, would you like to come in now and offer your perspective? You have been a player in this space for a long time. Tell us what do you see as the feasibility and challenges of implementing it, and how do we really make it happen? Because there is a lot of things like Agri data stack and a lot of things going on at our level. The space for even the data platforms is very crowded. So how do you see this being implemented? Give your perspective, Arindam.
Thanks, Parmesh. Thanks to the TAC team. I hope I'm audible. A couple of comments, and I'll give a few critical comments also on the very comprehensive presentations that we just received. Now, what is very clear that the problems listed out, it calls for strong action. And if you look at SDG 17, it talks about collaboration and partnership. So we are talking of collaboration and partnership across sectors, the government, the academia, research, the not-for-profit, the development sector, the private sector. It's not easy. It's not easy because incentives are not aligned. And that is absolutely critical to get all this in place. The second comment I would like to make is, now somebody mentioned, I think Parmesh, it was you, that we see a lot of pilots, well, to some extent successful, but they don't get scaled up. One of the biggest issue there is that these pilots are not being led by licensed retail banks. They are being led by the development sector, other players, interested players. Till we get the large licensed retail player to lead these initiatives, we are not going to scale up. And that's also a suggestion for the TAC team. You need one of the largest Indian banks to play ball. Otherwise, to understand their angst of why there's so many obvious suggestions, which they all know of, why it's not getting incorporated. You also need to see it from a large retail bank's perspective, because it's not only the agri or the farmer financing division, it's also a issue for the technology team, for the regulatory team, for the compliance team. And we need to remember these are highly, highly regulated and sensitive businesses. So we need to understand that perspective extremely well. But they need to be the key partners or even the leader for such initiatives. Otherwise, we will not see scale, we'll not see solutions, we'll not see adoption. That's the second point. The third, I would say that, the incentive, we think it's obvious, it's going to technology. Nipun mentioned the cost of origination, $20-30. It's going to cut down on transaction cost and risk cost, to put it bluntly. And if it does, why is it not technology in a big way is not getting adopted by the large banks, not only in India, but across the global south, where we have the small holder problem, the aggregation problem issues. Now, one of the issues I would like to highlight and sharpen a little bit is the way the markets work, because for a bank, once they give out money, they are not worried about the inputs. They are worried about how the farmer sells his or her commodity or the produce and how they can capture the cash flows.
in any smallholder ecosystem, say, let's take the example of India, any large procurement player, what they do is they do not buy directly for the smallholder farmers because the transaction cost, and second is the political issues of dealing with smallholder farmers is too complex. So they hire a battery of traders to buy commodity X at a certain point of time, at a certain price, at a certain quality, and they don't care from where it comes. These traders also try to maximize their profits and they move from farmer basis to farmer basis. Thus, the relationship in the supply chains do not build up. That's one critical factor, and banks know that. They know that every year the farmers are selling to different market players. So there's no way they can capture those cash flows. So the market, the fragmentation in the production system, it leads to fragmentation in the markets, which leads to a huge amount of confusion and transaction issues for banks to be able to capture, to understand that. Digitization will help, but that's where the real sector, that's the big buyers of commodities, the processors, exporters, aggregators, they also need to work very closely with large financial institutions to make this happen. On a standalone basis, most of the smallholder farmers, forget about the tenanted farmers, the women farmers, and the marginal farmers. It's extremely challenging with all the data in the world to, to create financial products for them. The last point I would like to make is there's a lot of emphasis on this presentation and on the initiative on farmer financing. I would also like to suggest to TAC, look at it from a post-harvest financing perspective, because the issues that Ashutosh mentioned of standardization and all the other, the broad solutions that you talked of, which is possible in 3 to 5 years. On the post-harvest front, the production cost, the production risk is taken care of because the produce is already there. If efficient warehousing systems can be built up, then standardization, financing, digitization, and all that becomes much, much easier. It's not going to solve all the problems of all the farmers, but that's where financing can come in, because banks would have a real collateral in terms of the produce out there to be able to roll out different financial products. So the financing, instead of or supplementing the production credit through post-production credit, it's extremely important. We have seen examples in India, across the world, where that has transitioned the agri-financing system. And in India, there are a couple of examples, say Argos or Arya Collateral, where they've demonstrated with digital warehousing and warehouse financing systems, standardization and the issues of data addressing transaction cost and risk cost and linking up the markets. That's where you establish these supply chains, visible supply and value chains, which makes financial institutions a lot more comfortable. So it's not only digitization, but to be able to visualize the supply chains from a bank, from an underwriter's perspective, is extremely, extremely important. I'll just stop here, please. Thank you.
Ashutosh, I think very important perspective. I think there are two issues which we need to look at. The segment we are talking about is not only dependent on agriculture. There's a lot of non-farm things going on there, and there is job employment, there's remittances, lots of things. So cash is not primarily coming from agriculture for that segment. And the other segment, which is really what Arindam is talking about, is one which is really dealing with traders. Now, these two segments are, a lot of cash is flowing through those segments, which is more difficult to capture unless and until you have a mechanism there. So I also agree with Arindam that you could try this solution where farmers are organized, infrastructure is there, and some is there. You can't do this where everything is informal. So because that's very difficult to capture in the real sense, and in the sense the subset, you have to drive a subset and segment and target it at places where the chances of doing this are higher. To me, when we worked in Bihar way back, and we worked on a warehouse receipt model with National Collateral Management Agency to set up the warehouses, and then a lot of these women who were selling this maize to all kinds of traders started pulling this to a warehouse and where you could really link this with the warehouse receipt and all that thing, and then it could get linked to credit, and SBI also offered credit because there was a warehouse credit there and all. So I think you have to talk to players who are in physical infrastructure business like NCMA, ARIA and all, and go to the segment where warehouses already exist. And there, I think this solution will fly much faster because there will be a finite kind of physical infrastructure to go with it. The second part I think I would like you to consider is pick the 500 best FPOs we have and work with them, because their inputs and outputs are much more calibrated and measurable, basically. If you start doing it with people who are completely unorganized, then it is going to be more difficult to do that. So that limits the scale. There's this issue there. But I think the idea of going and doing pilots is fine. But what you do in those pilots is equally important. With whom do you work in these pilots is equally important. So let me tell you now the new project which we are investing in UP. I'm just taking an example because they are at the ideation stage and this could be a very interesting thing to consider. So the government is building a data platform and it wants to invest in a data platform, but does not want to do it alone. It is going to work with areas of this world and others and all, and bring in them to do the physical part and combine the data part and do that. So I think that geography where the government is creating this new platform is more ideal rather than a place where there are a lot of legacy platforms where people will find it very difficult to graduate from the existing platform to others. So I would also like you to think of geographies which are just starting and which don't have history to look at where you launch that. But having said that, I think your choice of geography is fairly good. There is some traction in these states to do that, but you need to have some enablers when you do these pilots. This particular approach of data and digital does not work if there are no enablers. We are doing this in Kenya now, again with Equity Bank and 4 other banks. We have agreed for a subset of 100,000 farmers where a number of startups will collect data in the same way as you are collecting and create credit scores which the banks would use. Please also look at the examples in India where banks have already started using data. Take SBI working with, Jatin's outfit, which was doing this weather forecasting. They have graduated to credit scores. Croppen, all those guys, they already have a deal with number of banks to really provide them these services. So I think those lessons are going to give you more lessons of where the banks have accepted these kinds of approaches there. So I just quick reflections, but I would like to pick up some questions from the audience now, because there are a lot of interesting people on the other side who have worked in this sector for a long time, whom I know for a long time there. So Sudhir Goyal has led all the efforts in Maharashtra and is kind of the leading thought leader and implementer of these efforts from the government side, the additional chief secretary in Maharashtra for a long time. He asked, why don't we take a value chain approach as opposed to farmer finance approach? It's something what Arindam is saying in a way. So why are you focusing only on the farmer finance? Why don't you look at one commodity and do this across the board? That's one question I would ask you guys to respond a little bit. The second question which people are asking is that for the segment you are talking about, livestock is a very big sector compared to agriculture. So are you looking at livestock as a kind of a subsector for this segment, the 100 million you talked about, the women and all? A lot of all these women deal with livestock most of the time. So are we looking at livestock, or if you look at agriculture, then you neglect something which is going to be, and it's a big cash flow. People sell their goats and and just make cash out of that. They sell 5 goats, they sell 4 goats. The transactions are done in that kind of a manner. So what is livestock figure in your configuration? We can't cover all the questions. I'm extracting the main questions out of the list we have. And third is that will this not involve a significant farmer orientation and education and enhancement on the other side? Do you have partners on that side who will also orient the farmers to on this new what I think Ashutosh referred to as information and data-based kind of lending as opposed to collateral-based lending? It's a big change. it's not happened, and if it wants to happen, what else we need to do in terms of enablers. I completely take on board. I think we will arrange a second conversation from the World Bank side with about 4 or 5 states where you are already there. We'll talk to our team leaders in those and have a second conversation with them, whereby they could give you much more enabling advice, as well as also help you facilitate some of the transactions there. So we could do this as a second phase from the World Bank side as well. So can you respond to the 2-3 questions which have come, so that we get a response from you and a reflection on what Arindam said and some of the issues I raised? Can you get back on that so that we can close it in time? Yeah.
So, Ashutosh, do you want to take something, or I can jump into one of them, or you decide?
You get started, and maybe I think I just wanted to pick up one point that probably we didn't cover well enough. So, Parmesh, one of the things that we have done, exactly what you said, is that we are working with FPOs. And in each of these states that we spoke about, the choice was that we will go to those states where there are FPOs that we know. And in fact, one of the conversations first we had with the National Association of FPOs, to choose better ones of them, the more educated, the one who are ready, and seek their help in reaching out to the farmers. So the village level entrepreneur is also the combination of the VLE, who could be a kind of a paid agent, and FPO setup is the one that we are trying to use to reach out to farmers. So thank you for calling that out, and we probably didn't cover it well enough.
So one thing I would like to address is why not a value chain approach rather than going across these things, right? So what we have seen, Parmesh, is when you really focus on a particular commodity or a value chain, rather than building the enabling systems, the focus always has been that making it work for that scenario, for that area, for that commodity, which are not scalable and transferable and repeatable at a larger scale. So what we are trying to do is understand all these efforts that are made across the world and see the commonalities and the build a layer that can enable multiple of these things which are scalable. That's the kind of approach we are trying.
I'll just add to that, Parmesh. So the problem is so complex that it is difficult for any entity to put their hands around the entire problem and try and solve it, which is why these problems that I started at the beginning have remained for decades, right? So therefore, what we were hoping to do is to try and break up the problem into maybe 20 obstacles, right? And then try and attack each obstacle one by one, and thereby create certain basic capability. And that basic capability doesn't have to be technology, by the way. It could be a policy framework. Like, for example, some of the states are talking about how can their data be shared with a startup. That, in my head, that policy framework to share agri data with a startup is a very important enabler for every state to leverage, right? So technology or policy or physical engagement, etc., they're all okay. So agri data exchange, because we are talking about digital, right, and we are talking about doing things at scale, therefore, the first stopping point for us was to think about an agri data exchange. Now that we have one exchange being launched in Telangana, and that becomes a possible framework that we can use for other states, that is, one thing, in some manner, we made progress. Similarly, the attempt to try and take data from multiple sources and stitch it together and solve a problem is far harder than what we think it is. Because the reasons why people don't want to share data, there are many, many of them. I mean, worry about data getting stolen or their own business interests getting compromised. So the private sector has been very reluctant to come forward and share data, right? So bringing that forward and making that change happen is absolutely fundamental to any problem that we want to solve, whether it is livestock or it is cropping credit, or it's insurance, or it is something else. So that's been our attempt. The pilots that we are trying to do is to actually bring that to life, to see whether data shared from Kalgudi, from Samunnati, from somewhere else, can it really help a farmer who's not had access to institutional finance now get access to institutional finance. And by the way, not just finance, but also has access to better quality inputs, cheaper inputs, better price realization, so that there is a wholesome kind of an approach around that. The point that Arindam made, and I agree with that, which is the big banks have to get involved. I completely accept that. We have started with cooperative banks just because the NABARD chairman suggested that, look, that might be an easier obstacle to focus on rather than one of the big scheduled banks. But I don't know. I'm not saying we should do this and not that. We should continue working with trying to bring an SBI or an Axis Bank on board, right? So we will continue doing that. Livestock, by the way, just to address that point, livestock is a very interesting problem, but livestock is an easier problem to solve because there are cash flows on a daily basis that you can recognize, right? And so therefore, and cash flow lending in some manner is being done by startups for livestock, but it is not feasible or very, very difficult for cropping.
So
If I would add, one is that there is also an asset. Livestock clearly shows an asset available to the lender, and also that the community that we are talking about, the small, marginal, tenanted, and landless, right, the women farmer, are not the ones which are into livestock for even if they have livestock, there is for self-consumption rather than for trade. So in order to address that market, I think for us that livestock is slightly off the chart.
I
that is only
understand,
to allow us to
but
focus.
the question is that you have to really find out if the cash flow of the poor is what you are basing your model on. You will have to bring livestock in because that economy is almost 60% of the poor economy. That's the reality. So if you're
Yes.
only working with 20% of the economy or 30% of the economy, you won't solve any financial flow problem by that. You have to consider that because that's what you will know from the people. My colleague in Uganda who has worked in Marathwada and all for such a long time is writing that only that. That's because we consider livestock as milk. It's not milk. There's a lot of, India is one of the world's biggest meat producers right now. There's a lot of things happening there. So I think the awareness about the cash flows is a topic which has been researched for a long time. There's a project which we did was called Financial Diaries of the Poor, in which we had almost 1 million households recording all their transactions. And we were thinking that based on those financial flows, we'll be able to do that. But the policy illiteracy, the kind of bankers we have now really working on it, don't understand the livelihoods of the poor. They really will develop products which are based on industrial finance. And I think that's where I think the models are, that's why it's a complex problem. That's why it's not been solved. So what I will say is that don't be dogmatic about it. Go to a geography and see what the dominant livelihoods are and build a model around the main cash flows which are there. And sometimes livestock may not be the dominant flow. Sometimes agriculture will be the dominant flow. So pick it up. And I think the idea of going for proof of concept is the right idea. And I think if you show the proof of concept there, but what I would say is that people who are working on similar models, you need to bring all those people together at one place. People who are working with State Bank, others and all, and really bring all this at one place so that it doesn't, it again looks scattered. If we say that there are 16 efforts going on in India on using the cash flows and other kinds of things, we don't have all of them here also talking to each other. So maybe we have a second one, which we need to do is to bring all of them together at one place. And I think it will also help enrich your pilot. They could be co-producers in your pilot itself. And I think they will benefit significantly from the framework you have. Your framework is very elaborate. I haven't seen that kind of framework for a long time emerging. But the question would be on how do we implement blocks of that and involve a lot of people to come together on that. So that would be something we should look at as we go forward. But we will facilitate.
Point well taken, Parmesh. I think I mentioned in one of the slides that we are looking at the farmer's household income. And I think you alluded to that as well, that a lot of money comes in from Manrega, from, somebody goes and drives an auto and, tractor at the lean time, etc., plus whatever income they get from a little bit of livestock they have. So I think absolutely well taken. We will make sure that we consider entire household finance income and not necessarily the agri part as we build this. So I appreciate your comment on that. Thank you.
So see, we are doing a lot of evaluations of our self-help group program. 30% of the credit which self-help group women borrow from commercial banks, institutional finance, is used for buying autos and trucks for their husbands. It goes into logistics, basically. And it's such a complex thing that when the woman has resources and the government says that, okay, we'll give you institutional finance, they borrow first for a non-farm asset because that generates more value than the farm asset itself, basically. So I think it is the rate of return of various investments which the poor are making. That financial literacy is also very important to develop over a bit of time, because they make these investments without having any idea of what the returns would be. Any assessment is not done. So there is the financial literacy part. There is what you are saying, Ashutosh, clearly, that you do these pilots and that allows you to understand what the livelihood economy is. And then probably once that model is developed, we blame sometimes the bankers. Bankers have no way to look at farm economy, non-farm economy. It's a complex one. Even there are economists in the World Bank who have not been able to really do the cash flow estimation properly of the livelihoods yet, basically, because it's complex. So I would say that if we have sources of information whereby entrepreneurs are able to collect this data, FPOs are able to collect this data, at the point some, big kind of people who are buying this data are able to give this data, you will be able to create a kind of at least a reasonable kind of approximation of what is happening to that. You will not have, there's no need to have an exact model. It's like we have to get a model in there which allows us to estimate what's going to happen and predict what the risk is going to be there. So practically, there are two things we can commit to. One, in the 5 states where you're doing pilots, we will arrange meetings with the bank teams so that we can talk to them and they can help you with the government, and also they can help you situate how this will fit into the investments which the bank is doing. Second, we will organize a kind of an event in India which will have all the people working on these data-based lending approaches at one place and create a community of practice around that, because that will also help you to improve and get other partners to come and join your pilot. These are 2 practical things we will do, and really appreciate you sharing all your ideas and knowledge. And there's a lot of thinking which has already gone in, and I've seen this at different points but not seen in this way together. So really appreciate Nipun and Raj and Ashutosh to do that. And I thank all the people who have joined, and taken interest, asked a lot of interesting questions. Again, recordings, and we also give the chat recordings also, so that you don't lose out on the interaction. The chats are also recorded and they are also shared then with all the participants there. So look forward to continuing this interaction with you in future. And just to announce that next on 18th, we have an interesting thing from Africa from data generation to use, catalyzing climate smart agriculture through capacity development in Africa. Very interesting effort of a lot of institutions working in Africa on converting a lot of climate data to convert into utilization. 18th, 9 a.m. Please watch this space. But also, Nipun, can you announce your next webinar also, so that we are advertising it right now since we have people here there? Can you announce what the topic is and what you're going to do?
So on the 24th, thanks, Parmesh. So thank you for hosting this one, first of all, and then again, the next one coming up on the 25th. That is on 2 topics. The first one is on AgDX, which is our digital agri index, which is, as I covered briefly in the main session, to help us understand the penetration, maturity, and the impact that digital agriculture is causing at a state level, at a value chain level. The index is a multi-year effort. It will evolve as you go forward. But on the 25th, we will do our first should I say preview? I don't want to use the word launch. It is a launch in that way. Parmesh, is the first time that we will be talking to a global audience or to any audience about the index. So we'd like to use your platform for that, Parmesh. The second topic, a smaller topic, will be to cover the policy brief that the Agri Collaboratory recently wrote along with CGIAR for the G20. This is on digital public infrastructure for agriculture. So it was a policy brief that was very well received. It has been selected as one of the top 20 policy briefs by the Sherpa, India Sherpa, Amitabh Kant. And we'd love to share a few snippets and few thoughts from that document as well, Parmesh.
Thank you. Thank you very much. Appreciate that. It's going to be another exciting one. It's a new topic and would love to learn what's happening in that area. Thank you, everyone. And please join us 9 a.m. on 18th for the next series or the other ones which are coming in. We have put the link to all the future other webinars which we have done in the past. Please go and watch them in your own leisure. And and if you have any new ideas about what you would like to present in this series, feel free to write, and the address is going to be put in on the chat there. Thanks a lot. Good morning, good afternoon, good evening, good night, wherever you are. Bye-bye. Thanks a lot. Thanks a lot, Nipun, again. Thanks, Ashutosh. Thanks, Raj. Thanks, Arundam.
Thank you, Parmesh.
Many thanks
Bye-bye.
for joining. Bye-bye.
Thank you, Parmesh. Thank you very much.